Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Tuesday, the 9th of May, 2023, 6:25 p.m. Central Time. So, President Biden, Mr. McCarthy met, and of course, all the other underlings and the senior level staffs were there. There were altogether probably 4 members from Congress, and then there were staff members involved with the president presiding over everything. The meeting lasted 1 hour. It was a photo op opportunity. I told you it was going to be a very short meeting. Going into the meeting, both President Biden and Mr. McCarthy said, no, they're not in favor of an extension. They've got to resolve the differences. Well, what do you think politicians always do? Politicians always say something so they can give something up, especially when they're negotiating with this money. Remember, there's been 100 extensions. This is not the first rodeo. This is how it's done. You say no to everything so you have something to give at the table to get the extension. I know you're going to say, Ira, what is wrong with you? They're going to go right for the throat and they're going to resolve their differences. Sure they are. Sure they are. They're not resolving diddly just yet. There's a lot of politics at work here. The president is in run for another term in office. We then have other members of Congress running for other terms too. Everybody's going to get TV time. Everybody's going to show how much they fight. The parties are going to go and unify in one way or the other and take it for whatever it's worth at that point in time. So that's what I think is going to happen. The next meeting is going to be this coming Friday. So they have Wednesday, Thursday, into Friday for the staff members to meet and figure out what they're going to say. Do you honestly believe if you're running for president, I don't care how rough you want to be, Joe, you don't dare put the country into default? That is what you'd be running on, that now people don't get their Social Security, they don't get their their food stamps, they can't eat because you want to make a point. Not going to work that way. And Mr. McCarthy, it's the same thing on you and your party. So how it works out here, as I said, it's going to be not a solution. It'll be an extension at the end of the day. For what, how long, those are the details that they'll have to work out. And then we'll get this battle that goes on. Probably, my guess, into July, September, something in that time frame. I don't know where they'll end up. As for the market action, once the market sees that, the market will breathe a sigh of relief. But not really. Tomorrow morning at 7:30, you get your CPI numbers, and I'll be looking at that core inflation. Now, center on the number 5.4% to 5.5 for the core CPI. You get anything 5.3 or under, the market's going to say, that's it. We're starting to see the break there, and we can extrapolate and say that even though we had a good jobs number, if you take 3 months and you add them, you see the numbers were slipping. Conversely, 5.5 or higher says, no, that stickiness is still here. The Fed's got to go. And yes, we have jobs numbers, but they're not breaking that much. Fed's going to go to 25 basis points. Right now, the market doesn't believe the Fed's going to go. I'm talking the swap market. Guys like me do believe they're going to go another 25 basis points. But you have to have an open mind. The Fed said it's data dependent. Therefore, if the data comes in weak, I have to switch gears. If they're data dependent, why I not? Conversely, if the Fed said they're data dependent and the data's strong, everybody that's going, now the Fed's not going to do that, you got to join my camp over here and say, yes, they are going to go. Tomorrow's a big number. You get a smaller number, but it's important. PPI comes out on Thursday. So lots going on. We also get on Thursday the Bank of England. They're going to come out with their monetary policy. So let's take a look and get a feel for what's going on here. You can see that the market has been staying over the 18-week moving average of closes. You can see that for the week, you're down about 1/3 of a point. Not a big deal the first 2.25 days of trading. Why quarter? Because we've been open already an hour and a half. You can see the pattern here is just whipping up and down. I think you'd agree. But overall, you have lower highs, lower lows. You have a downtrend at work at this point. The market is trying to stay under the 18-day average. So as much as people want to fight, the trend is down, the bias is down until you take out this high. Don't take out that high, different game. Take that out, you flip around to higher lows, higher highs, and you're back into the bull camp. This can go either way, lickety split. The market has twice come down to the lower bands held, come back up and fought the battle at the 18-day average both times. It did not succeed in getting up to the upper Bollinger Band again. Momentum-wise, you have gone flat in the market with the price action. When we come to the micro mini NASDAQ, the trend is up, not down. Higher lows, higher highs, but very overbought. Overbought, the way I teach charting, doesn't bring new money into the market. The micro mini Dow, downtrend going with the S&P, lower highs, lower lows, got down to the 200-day average of closes, found its support about 4 days ago, made it back to the 18-day average, but this market is still very much in the bear camp. You'd have to take out the high right here in order to negate that, and like the S&P, if that's taken out, you flip over and you say, the market's re-entered the bull stage. In the Russell, the trend is down. The market has worked off an overbought condition. I think the pros this is the market they're probably more content being short sellers in than any of the others, looking for the market to get back to the Bollinger Band. In the T-bond market, do you see the green line, the 100-day average? That's what the market's come back to for support. If that gives ground off the CPI tomorrow, look for the next support to be the lower Bollinger Band. In the 5-year note, you have got a market that's been in an uptrend. It's finding support. Now, when you're in an uptrend, it means yields are falling. When you're in a downtrend, it means the yields are going back up. So always remember, these are inverse markets. In the dollar index, you're fighting a battle right at the 18-day average. The minor trend is, at this point, up. If it continues, the Bollinger Band top will be the number I look at there. In the eurocurrency, in a downtrend. And today you got down low enough where I think the pros covered their shorts going into the CPI number. In the British pound, it's been in an uptrend that's overbought, running against the upper band, backing off and running. Has not embedded. Had it embedded, I'd get very friendly this market. Not the case here. My guess is come Thursday, there's going to be a 25 basis point hike and everybody will say, that's it. They're not going to be able to go anymore. Folks, until inflation breaks, they got to keep going as much as they can. Every central bank is wondering just what happened in Australia. They're wondering, we can pause here, the inflation, give it the lag time, it's coming down. And then as Australia saw, it didn't come down and they had to raise rates. At least they didn't pivot from raising rates to lowering. And that's going to be the dilemma for all the other central bankers where we hear, the market wants them to go into the pause phase. Pause is not a decline. Big difference. All you're doing in a pause is you got your fingers crossed and you're saying to yourself, is the lag effect finally going to kick in and inflation's going to fall? Because on the first uptick, the banks have to react and they can't wait and say, the lag, that's just allowing it. They'll raise rates again to nail it in, just like a carpenter. Got to nail in that this thing is going to go down. When you look at Bitcoin, another crypto exchange, a big one today, declared bankruptcy. How many you have to go through? I don't know why people are so enamored with this. I just don't get it. When we look at the differential between Brent and WTI, you flip to the other side of that red line, which means Brent is stronger than WTI. It's interesting how the Saudis say that they didn't do anywhere near what they wanted in their revenue stream because the price of oil has slipped back, and it has, but they're going ahead with dividends, and I think it's free cash flow, 50 to 70%. So the stock, of course, takes off to the upside. You can see where the resistance is in the market. As I said to you before, what do they do at the next upcoming OPEC meeting? They've already cut 1 million barrels a day plus, and now they're going to have to probably cut again if they want to get these markets to hold these values. In WTI, the trend is clearly down. Look for the pros to be selling the market as it approaches these values. Stop over those highs. Gasoline, as you know, you lost the embedded reading. I'm looking for price and the 18-day average to come together before that number's hit. I feel good about that trade. And the nat gas, it's a bounce in a market that's still overall sideways to lower, not doing a heck of a lot one way or the other. Now, I'm very aware that a lot of you have asked us if we'd prepare our suite of indicators for TradingView, and we've done it for you. So, 6 powerful indicators. We use up 2 of what they call their slots. When you do this, you're going to get the swing lines, you're going to get the moving averages as I use them, all the ones that I use. You're going to get your Bollinger Bands and your slow stochastics with my study in addition to window envelopes. So they'll all be there in the suite for you to work with. Yes, the slow stochastics will use the formula that I have. Outside bars will be shown if you want them to work with too. You can work with these different pairs very easily. These all tie in with my different charting courses, by the way. You can see how each one of the studies looks here in the configurations as you go through them. And as I said, it takes up 2 of the 5 slots. So you got plenty of stuff left for you if you're working with it. How do you get to it? It's simple. You can go to our website. You sign up on our website. You go to our website under software. It's right there. You can also click up here at any time. It'll take you right to that area. Or the number, if you have a question, call our staff. They'll get you set up. From the time you set up, after we do the setup for you, and then you'll get an email from us. You're all set. Just go into your view, and you'll see everything right there for you. Pretty simple. I'm Ira Epstein. Thanks for watching. Remember the CPI number tomorrow. See you then.